What is going on YouTube? It's Sank and we are back with another one. Now in this drop, coming at you guys with a couple of plays I'm going to bring to attention. But before I kick things off, if you'd like to help out the channel by hitting that like button, because it keeps the show rolling. Alright guys, so in this one, I'm going to give you some direction and guidance and highlight a few plays that are far from their final form. That being said, if we can jump into these plays on good entry, you can ride them all the way to the top, netting good returns on the way up. Now there's a lot of moving parts out there in the market, there's a lot of distractions, so in this one I'm going to give you guys some focus and put a few plays in the spotlight that we will be winning off. So you guys already know in this one, as always, about to make these money moves, so let's run the first one. So we're going to kick things off here. That's ticker symbol LOVE, that's Love Sack. Now this is a play that has a history of being an underrated play in the market, but that's fine because we're just going to continue to capitalize on that. Now if you guys remember, this is a play we first picked up in January. That was January 22nd to be exact. We're now sitting at over 50% return in this play. I want to let you guys know it doesn't stop here for the play, because today they came out with their earnings and it was a complete annihilation from the play. Wall Street even thought they would come in with an unprofitable quarter. Lovesack came in, delivered the goods, posted up that profit. Now check this on the day, this one closed up 2%. But intraday this play was flying, hitting over $87. But they got caught up in the rest of the market movement. We saw a lot of these growth plays come down in the later part of the trading session, but this play just will recoup all of that back and more. Now it's not too late to jump into this play if you're not already in it, because from what we know from earnings, this is a play that is en route to hit that triple digit. That's $100, making it another one of our home run plays, okay? I'm happy for you guys to accumulate your position where they're at right now. Obviously, it's better if you catch them on any weakness. Catch them 82, 81, $80. That's a better entry to get into this one and then run this one back up. Now, unless the markets really go sideways, this one should have sticking power in the low 80s or even the high 70s. So as I say, accumulate your position here, get ready for the run up in this one. Now this is a play, we're in it for the medium term for the time being. Over time, we're going to monitor how management uses that cash to continually scale and grow the business. Might be in it for the long term, but as I say, we just need to see management's next moves with this one. Now check this, over the last 3 months, this is a play that's shown that momentum when the rest of the growth plays are being crushed out there in the market. Now, given what we know from their earnings, this one is on course to continue that momentum right through. The next one I've got for that's ticker symbol GRWG, that's Grow Generation. Now, despite this one being in the mid 30s just the other week and now climbing to the mid 40s where they're at, and we all benefited off that because we scooped up that dip, this is one that has a lot more room to run. Now, if we zoom out, a couple of months ago, this play was en route to that $70 mark, and if the market didn't turn upside down, this one would have continued that momentum, because this is a play that is in scale up mode right now. Management are very ambitious. They have a plan to basically double this business over the next 18 months, taking that stock price along with it. So if you're sitting on this play and you scooped them up with us a couple of weeks ago and you're sitting on good returns right now, there's still a lot more room to climb. And if you're new to the play, jump on board. So as I say, I'm happy for you guys to accumulate where they're at right now in the low 40s. But listen, if we catch this one below $40, that will be a blessing. And you guys know it will be load up season, because over the next 6 to 12 months, this is a play that we're going to hit big with, okay? So this is one that's going to bring to your attention for you guys to continue build your positions in this one. Get ready for the climb. The next one I've got for that's ticker symbol PINS, that's Pinterest. Now post earnings, when this one dropped down to the low 50s, I said scoop this one up. Then they climbed to the high 50s, I said add to your position. Then they moved into the 60s, I said continue building. Now this is the last call, because we're not going to be adding to this one above the mid 60s. Just shows you guys that climb from the 50s to the 60s and how rapidly they did it. Shows you the market overreaction to their earnings. With Pinterest, it's all about their international expansion and that scale up in the business, and we know they're making moves. If you guys remember when they dropped that press release saying that they're moving into Latin America, we saw this one explode up from the 70s to the 80s. Now it's only a matter of time before the next catalyst comes along, their next business move, and we see that stock price move up. So the idea is to get in before the catalyst. This is a big potential play, so I don't want you guys to get wrapped up in the volatility of post earnings movements on this one. So as I say, ideally you want to build your position in this one in the 50s, but it's all right for you guys to start your position here. They drop into the 50s, you guys already know, we load up on this play to get ready for the climb in this one. This is another big potential play. I'm expecting this one, just like Lovesack, to enter into the triple digit realm. Okay, so that's $100. So that's big upside on that current stock price. All you guys got to do is make timely entries, show some patience, and you'll be hitting the W too. The next one I've got for that's ticker symbol STEM, that's STEM. Now just this week, this play was trading at $35. Then we saw a cool off in this one over the last session. Now they're trading at 30. This is a play that you guys want to be adding to in weakness. Ideally, you guys want to have an average entry on this one somewhere in the 20s. High 20s, mid 20s and below is ideal on this play because in due time, we are going to take this one up to the 40s. This is a play that's got good business momentum. They've got a roster of high profile clients and their product is unique, and we know that energy space is just going to continue to grow. So I just wanted to highlight this one for you guys. That's STEM. Now I just couldn't let you guys go without touching on this one, so I've got a bonus play for you. That's ticker symbol SE, that's C Limited. Now this is a play I like to revisit frequently for you guys because this is a big potential play. This is basically 3 plays in one. This is a gaming play, it's a e-commerce play, and a fintech play too. All high growth industries, and this play is firing on all cylinders. Now last time we spoke about this one, they were trading in the low 200s. Since then, they've been showing that momentum. And if we look at that chart setup, they're on the verge of making a breakout. Okay, so they're at that resistance around that 270 mark. Now this is the 3rd time they're attempting a breakout at this mark. They might break through, that'd be great for our returns. If they don't break through and there's a price reversal, you guys know what to do. We scoop up, we load up on this play because over time, wouldn't surprise me if in the next 12 months, this is a play comfortably sitting in the mid 300s or the high 300s. So I just want to give you guys a heads up on another winning play. As I say, we really are making these money moves. Alright guys, so those are the plays I've got for you and the strategies to go with. Now to remind you guys, give you the heads up that tomorrow we are getting that inflation data. Now if that does cause volatility in the markets, you guys know you've got the plays to focus on, which you load up on, because even if these plays come down, you've got to remember that's not related to their business. This is an external factor that is transitory, that will pass. The businesses, they're showing momentum, so it's just an opportunity for you guys to get quality plays at a cheaper price point, and we'll ride them back up. That's how we're going to hit success in these markets. So if you've been rocking with the channel, you know what time it is. The question is, how do you determine when it's time to average up in the stock? Take stocks like Love and several of your banking plays that are all-time highs. If we're in the money on those plays but expect there's room to grow, do we buy in or wait for a dip? So to wrap this one up, I want to share this one with you guys. Now most of your activity out there in the market should be averaging down on plays, but I want you guys to be mindful that there will be a point in time to average up on plays when they cross over your average. Now in terms of when to know if you should average up, the key is the play should be showing business momentum. It's all about these plays scaling up, moving to the next level, posting up better quarters than they previously did, because that's what's going to drive that stock price. So they could do that through acquisition, organic growth, partnerships, whatever the case may be. But as investors, we just need to see that momentum. And you identify the Love Sack, that's just a perfect example of a play that's just taken their business to the next level, showcased by their recent earnings. So that's a play that's got the okay to average up on, because they're going to continue to climb and you're going to continue to net those returns. Now, if you remember a couple of weeks back, I said those that aren't already in Love Sack, I'm going to get you guys in on good entry. Then the play hit the buy zone, which was somewhere in the high 60s. I said jump on the play, and I had someone comment saying, why would you jump into a play when it's near its all-time high? Well, if the valuation is in check and the play is showing momentum, guess what? That stock is going to rise. And here we have it. We're sitting on a play that's in the mid $80 region, and it's got a lot more room to climb. They also mentioned the banking plays as well. I've given you guys a green light for Wells Fargo play, for example, because as we go through economic reopening, business is going to be booming and it's going to benefit the banks, because a lot of these businesses are going to take up the banking services and a lot of these banks are going to outperform. So these banks still have room to climb for the time being. So it's all about understanding the nature of the businesses and the momentum behind it. As always, I'm running the technicals in the background. I'm going to get you guys in a good entry on these plays so you can get maximum returns on the way up. Alright, so that wraps up for this one. If you've got any questions for me, do leave them down below and I get back to you. I want to say I appreciate you guys on your way out. Do light up that comment section for me. If you're new, join the movement, and I catch you on the next one.